Tell you what, today was a move, wasn't it? There was some really great price action on SPY, as we talked about a couple of days ago on my previous video. If you want to check out that link, it should be popping up right to the right here above. But back to the lecture at hand. Today, what a move. And I tell you, it's a setup for even a more better move for tomorrow. And I have about 2 or 3 additional trades setups that I want to talk about. You know, two or three that I want to talk about tonight that I think is going to set up some of the best entry tactics and the best pivot points for you to find the best price. Because remember, we're here on the hour. Buyers want to buy low, all right? And so that's what we're going to focus on tonight. But before we get started, you know how we like to do. We like to do the Trader's Creed to get our mindset together, because it is about psychology. But remember that psychology doesn't really matter if you don't know the environment that you're in when it comes to the stock market, right? And so let's get this together, and we're going to start from the top, all right? The Trader's Creed. I am a consistent winner because I objectively identify my edges. I predefine my risk of every trade. I completely accept the risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore, I never violate them. So everybody, please get familiar with this creed, save it, study it, and try your best to keep it in mind, because I believe on your journey in trading, these things will make more sense to you as you go on. All right. So guys, let's go ahead and check some of the economic data, see what we have for tomorrow to be prepared. You know, this volatility in this economic data really serves a purpose. And so we're going to go ahead and get to that here. So here we go. So tomorrow is the 23rd of January, and we have core retail sales and unemployment claims. The unemployment claim in this core retail sales and sell data is going to come around 8:30. So of course the market is not going to be open for us who trade after 9:30. So this will affect price in some form or fashion. And around 11 o'clock, we have consumer confidence at 10. So the market is going to be expecting good or bad numbers when it comes to the confidence of whoever's buying, right? And 11 o'clock, President Trump speaks tomorrow. So we got a pretty juicy setup of data for tomorrow, and I'm looking forward to it, all right? So let's get back to the charts, and let's talk about what we came here for, all right? So listen, here's a scenario. Let's just say that tomorrow we get that pullback, right? We get that deep pullback, okay? Right here at the top of this previous range, right? I want to try to get this move here, all right? This area right here would be the best, okay, like the perfect entry tactic to be able to, you know, trap in some liquidity and maybe retest these highs here, okay? That's the number one scenario, okay? All right, it's the number one scenario, all right? But sometimes it's not that easy to get that straight move up, right? Okay, and so my second scenario that I want to tell you guys about, and remember, we are still on the hour. We're going to take this off. Okay, take this off. Bear with me as I navigate this screen. All right. Now, my second scenario, all right, because it's not really about if, it's just a matter of when, okay? And remember that ranges act like magnets, all right? Remember, we have a bull flag, a big move up into a range, all right? And we have a bull flag, a measured move that we completed, and we continue as we broke these highs here around 599. We talked about this in previous videos. Now that we got that move, we create another leg, okay? But this range here acts like a magnet. This range right here acts like a magnet. And so what happens is, in price, you get these directional pulls. These directional pulls that takes the market, okay? Takes the market, and it likes to come back down, okay? But we don't like really picking bottoms for this magnet, All right, just like here, we have some movement. All right, instead of us picking the bottom, how about we just get what I call a technical two-try failure. Let the bears try once, let them try twice. Okay, and what we want to do is we want to come here and we want to run their stops as fuel as they have to buy their way out of it. Once they try twice, 1, 2, right? The same way it happened here. Okay, same way it happened right here, back on January 13th and around January 14th. All right, technical bear trap pattern. All right, we enter into the trade here. We put our stop, and as the market makes these what we call measured moves, we have one right here. So you got the first leg, all right, and then you have a second leg. Okay, the second leg represents the halfway mark. Okay, and see what happened is once you trap in the bears with a two-try failure, the stops are above here. The stops are above this red line. You want to run those stops. Remember to run those stops so that you can participate in the upside. And sometimes you don't get a straight move up, like I said a couple minutes ago. You have to trap them in here, all right? And you get this move here, and you pull back again, all right? Same technical pattern. You got a higher in price, pull back, okay? And right there at the breakout pullback, pullback zone, that's when you want to trap in the bears for another technical bear trap that we have here. This is a technical bear trap, right? Something I'm going to be talking about more, right? This being the perfect entry right here, okay? Now, I know if this is your first time watching this, it might be a little much for you, but it's okay because in my group is the unique trading group. Forgive me, I'm so excited. But the unique trading group is unique because you can shape these things into your unique style as you grow and you learn strategies. These are technical patterns, and most traders who they start with candlesticks and things like that. Well, I like market structure, price action, and what they call auction theory. And there are 3 steps, and I talk about this a little bit more. All right, if you want to check out information and join a great thriving community, my Discord is right below for free, so make sure you check that out. And if you want to check out some of my social media or even the book that I wrote for trading options, that link is also in the description as well. And I'd love for you to join the family and join some of the other folks that have found value in purchasing my book. All right, now back to the charts, because I know that's what you came here for. Now that you have these ideas, right, you understand these technical patterns, all right? I have one more that I want to show you, okay? Now, this is what I call a V bottom and grind, all right? And we're on an hour time frame. Now, of course, we don't want to buy high, right? Buyers, professionals, we don't want to buy high, okay? Just like we did over here. You see my cursor, okay? How we found a technical bull trap pattern, the same way we did a bear trap when we trap in liquidity and run their stops. The same with the bulls here. We run their stops, all right? We get a lower high. A lower high means a bearish signal for a downtrend, okay? All right? And they retested these lows, all right? A rejection created a lower low from this low, and then we brought it back up, made a technical W pattern right here. 1, 2, okay? Broke these highs for the gamma squeeze. You get this big boom boom candle, all right? And then we go towards the highs, and it's the same principles. And so my point is a V bottom grind can look something similar to this. So you'll see this, all right? You'll see this. Now don't chase this move, okay? Don't chase this move. What you want to do is, as it grinds, okay, you want to come and take you a parallel channel, and you want to grab those bottoms, all right? Grab those top of those wicks, and I'm using a drawing, okay? And you want to find prior swings. Prior swings for price to pull back to at pivot points, for you to trap in some bear liquidity, right? Find a good demand zone, an area where the bears are getting exhausted, right? We get that move. Some of these pullbacks are some of the perfect entries, all right? Right here, right here, right here. You never know, or you could get that, or you could get another one where just because we've took it so far down and it's a lot of bear momentum, we could simply, we could fall, come back up here, reject again, let the bulls try, what we reject. All right, create what we call a head and shoulders pattern. Go back to these lows, only to do another 2-try failure. Okay, guys, to break this again, to do the same thing we did back here in the same way, and we get up here, we do the grind. All right, these patterns happen all the time. All right, those are my 2 or 3 setups. Now, I'll be quite honest with you. Today was a very interesting day. All right, and I wanted you to understand that this is what could happen tomorrow. All right, because it already happened before. Everything that I just showed you happened before. All right, this is that pattern right here. I'm sorry. This is another pattern right here. Same thing. Okay, this stuff happens all the time. All the time. All the time. It's happened on different time frames. All right, and so I don't want to hold you guys for too long. That's pretty much what I have for you guys as far as technical setups that I'm looking for tomorrow. Right here, I have my Bollinger Bands here. I use these on my Trading View chart, and I never take them off. And I have the 21 SMA for my call and my put triggers. All right, and so if I want to leave you with anything, I just want you to know that we have a lot of upside in Amazon and Apple. Some of the Mag 7s are coming back, Nvidia, and so we do have some momentum in the market. And so you want to be cautious because tomorrow we have data, and for the past 2 days in the market we've had a run up, and so it's quite natural that people will want to take their profits. Okay, so you just want to be cautious and wait. 594, 593 being an area where gaps are. Also 599 being another psychological area. All right, and so I'll leave you with this. If I can get a pullback to that 21, okay, and I can get a place of demand, I'll hold there at 600, which is a psychological level. 600 has to hold, break as demand in order for me to take calls. If it does anything other than that, we say we wake up in the morning time and it's below 600, all right, all these levels right here could be hit because this is where we left from. All right, so depending on where we are in the morning time, it'll make me pivot and be adaptable and flexible to my trading plan because I want to buy low. Okay? You can get another technical pattern, get a 2-legged pullback, right? Those are very common. You get a 2-legged pullback, and what happens is you want to trap in the rookies, okay? Amateurs are here trying to sell low. We don't want to do that as professionals. We want to try to get the best risk to reward for calls back up to the upside. All right, we want to try to get the best risk to reward for the calls back up to the upside. That's what we want to try to do. Okay, so that's what we're trying to do, to go retest the highs. And that's what we want to do. And so you don't want to be down here. What you want to do is, all right, don't pick bottoms, right? We're unique traders. We don't pick bottoms. We use technical patterns that we notice all the time. And you get a 2-try failure, all right? 1, 2, all right? All right, and you see these highs right here? Right, these are stops, and we want to run those stops for the bears because this is where their stops are. Their stops are here. They enter into a put, they put their stop below a bar, above the bar, correct? So we want to run those stops and make them have to buy them back. Okay, once they buy them back, we get that explosion here. All right, and that 21 ends up. The 21, it comes and it curls. You can't see me. It comes and it does that, and you want to grab it. When it gets above it, get it to price. Take it on to the high. All right, protect your profits here, secure profits. All right, see what it does. You might get another pullback. All right, buy the dip if we're in a good momentum, which ultimately creates a head and shoulders. All right, listen guys, I don't want to hold you long. I hope you enjoyed this video. Tomorrow, be prepared. Always be prepared for both sides, okay? Because we are at a very interesting time. And if you found this video at all valuable and insightful, do me a favor. Hit that like, join the team, subscribe, hit that bell notification, and until the next time, peace.